Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Ladies and gentlemen, welcome back to a new year, a new episode of the AJ Brown Show, episode 165. My name is Cyprian Francis, and with me, as always, the main man of the new year, Mr. AJ Brown. Good morning, AJ. How are you doing?
I'm doing simply amazingly wonderful. Hi, Sip.
We closed off our last week with some slower what would they call it? Christmas markets, holiday markets, Santa Claus rally this week. We're kind of pulling back from that rally. The rhetoric between our conversation was, hey, it's going to be a little bit choppy until we head into Monday, the 6th. Are you still feeling that way?
Yeah, absolutely. I mean, this was a very quiet week, very little economic news. The employment report that usually comes out in the beginning of the month has been postponed because of the holidays till next Friday. So, we got a little bit of construction data, but, the housing market is its own animal anyway and really isn't doing micro movements to the market. So, yeah, it was a quiet week. And I stick by what we were saying yesterday. It's been a few extreme traders with extreme voices speaking loudly these 2 weeks. And the market's really going to return. People are going to come back, sit in front of their trading terminals, really focus on these discussions of 2025 come Monday.
And so I just pulled up the S&P chart. It seems as if we're sitting at this lower secondary level, waiting the next move. So what are you and your program participants kind of doing heading into the weekend? Are you optimizing your watch lists? Are you looking for some names that may have triggered a trade or a signal and not necessarily follow through? Is that kind of, or are we just stepping away and enjoying the last couple of days of peace?
I mean, a lot of us, we had our program participants call, which we have every Thursday, and we had quite a few people not show up. But the folks, and this just kind of emphasizes my whole process. We had one of the best calls ever yesterday. And the reason was, I mean, it's not one of our best calls, but one of our more technical calls ever. And that was because we had just a few extreme investors who felt dedicated enough to join our weekly calls show up. And so we were talking at a higher level. We were talking more experienced stuff yesterday. So it turned out to be, I mean, usually the calls are scheduled for an hour, or the workshops are scheduled for an hour. Yesterday's went on for an hour and 45 minutes as we went through different scenarios. We compared different trades. It was actually phenomenal, but it was my extreme, focused program participants who made it to the call. And so we wound up, answering questions and talking about things we don't usually talk about because of this. So, yeah, same in the markets. I mean, that's just a micro cosm of what's happening in the markets right now. We have, just those extreme folks showing up trading. What my program participants and I are doing is totally, vetting our watch list and making sure we're ready for this upcoming month and upcoming year of 2025.
And so, in that, any takeaways from that may be worth sharing with our audience without naming specifics? I know we have your pick of the week, which may have come up in that, but any good takeaways?
Well, I
Oh,
gotta
screeners. There
say,
you go.
so I'm showing you guys right now on my screen that I've got, when folks are part of our program, they get access to our screeners. And one of our screeners is starting to pick candidates, you know, um, there's a lot of candidates because of the sideways movement in the market right now. I mean, take a look at this list of candidates to sell covered calls and sell covered puts against. And so, our watch lists, our pick lists are off the charts with what's happening. And that's just because the market is in this sideways chop, which premium sellers, we love that.
That's right. I just put the link to some of those tools in the chat for everyone to check out. How often does that watch list update?
I mean, we have 4 different screeners now. 4, 3, 4. We have 4 different screeners as part of our program now, and we update them every evening.
Okay, so every evening there's a rotation of the names. We've got the S&P chart up. You have any analysis on that? I know we usually look at your Fibonacci's, but it seems as if the chop is what's happening. And so as a premium seller at this time of the month, is it a good time to put those positions on? I mean, maybe next week, but to start the month to take advantage of potential chop?
Well, the last 2 weeks, so we never had our Santa Claus rally. Let's say that. Santa Claus rally means gains, the month of December. Month of December, we had anything but a rally. But what we did have is the usual, lack of volume in the last couple of weeks. And I don't expect the volume to return till next week. So we can't really trust the price action of the last couple of weeks. But with that said, if you look at what's been happening here, let me zoom in a little bit. I'm going to come to 3 months worth of price action on my chart instead of the usual 6 months. And what you can see here, Sip, is that we're getting these, sideways moving almost 100% retracements. I'm going to do one other adjustment to my chart here, and that is I'm going to make it with those rulers that I use. And so you can see each time we retrace, we get into this red zone, and you can see 2 times in a row, we've hit this 100% mark. And so what that means is a lot of sideways price action. And that kind of correlates with the story coming up, because sideways price action usually goes along with confusion and uncertainty. And if anything, investors, hearing the rhetoric, hearing different opinions about what's going to happen with the change in the whole fiscal, now they're talking about the Speaker of the House perhaps running up to some challenges to retain. This is Mike Johnson here in the United States, retain his position. And so all of this shenanigans going on is creating some confusion that creates size price action in the markets. And when we look over at the VIX, which is a measurement of confusion or uncertainty, let's get that up and running here. If we put the VIX in, yeah. So the VIX, it had a real spike a few weeks ago, a couple weeks ago, and now it's slowly going up. Listen, this is a premium seller's dream. We like the sideways price action because that's perfect for premium selling strategies. And also, we like the rising VIX because that's also perfect for premium selling strategies. So, my program participants, while a lot of traders out there who rely on directional movements of stocks and commodities, my traders, I mean, we're all getting revved up to be very happy this year.
And that time frame, that window can be pretty short, especially right. It could be like 3 to 4 weeks for some of these positions to just utilize the chop and time. And that's one of the beautiful parts of utilizing options for your portfolio.
You're talking about when they can actually pay out. And that's true. Their first payout could be 3 to 4 weeks. But the other side of a premium selling strategy is it'll go as long as the market's sideways choppy. It pays out, if you're using weekly options, it could pay out every week. Using monthly options, which is what I like to do, it pays out every month, but you don't have to be, going in and out of trades. You're basically keeping the same trades going, making minor adjustments on a monthly basis and creating those premiums. It's quite an elegant way to trade.
Yeah, let me just pull up real quick. So, if that's a new concept for anybody watching, listening, AJ's got an awesome workshop that breaks down four fairly more simple concepts that we discuss, and you go through wonderful examples. And the great thing about this is it's actually updated rather frequently, so the examples are up to date and things like that. So, head on over there. I did have a question on the VIX, and that's the white line there. I know we've
Yeah.
referenced that a few times. What is that again? And in terms of, is it good or bad for us premium sellers, whether we're above it or below it?
So the origin of this white dotted line, if I take the VIX and I go back pretty much to when the VIX was created back in 1986. We're coming up on 40 years of the VIX. What you'll notice is I've simply let the chart software draw the best fit trend line. So, markets tend to move up, right? The S&P tends to, if you look at it over since the beginning, it goes from the lower left to the upper right in a diagonal motion. The volatility markets go sideways, right? There's a base level of fear and uncertainty in the implied volatility markets. And so that's what we're drawing. We draw this best fit trend line, and you can see it looks almost like a horizontal line. And what you can notice is over time, going below that line is when investors are feeling very confident, and going above that line is when they have uncertainty and fear. So what you can notice is a lot of the time they're below the line, but they don't go, extremely below that line, right? And it's a psychology experiment, Sip. It's like, um, how confident can a human being get? And maybe it goes back to like caveman times where we had to be on our toes and always be ready for the unexpected. So what happens is we only get so secure, we only get so confident, and we might remain that way. Like you can see on the VIX, we could remain that way for like a decade. But then when any sort of uncertainty jumps into the markets and our fear and survival mechanism kicks in, you could see that it kicks in with some amplitude. This is the dot-com bust. Over here we've got COVID. You can see this little mark right here. This was, the Great Recession. And it's interesting that the dot-com, oh, actually, I'm sorry. This one is the Great Recession. The Great Recession and COVID were about the same. The dot-com bust lasted a little bit longer, but wasn't nearly as scary. You can look all the way over to the left. This was in 1987 when there was the big, fiscal change and big, it was called Black Friday. Some of us were alive. I remember I was alive. I was about 13, 14 years old, just starting high school. And, there were some big changes on how investing was done, and it caused the market to, and it caused all this uncertainty. So that's where that white line comes from. So then we take and we look at, the present. So I'm going to look at the last 6 months, and you can see, for the most part, we stay around that white line. When we get and start to creep above the white line, we're on our way there now. It starts to create a little bit of more uncertainty than confidence in the market. You can also see I've got my red and my blue lines. These are extreme levels. So if we go below the light blue line, it means we're extremely confident. And when we go above the red line, it means we're extremely fearful. So you can see we had a little bit of that in the beginning of December, but quickly pulled back. But, premium sellers love to be above the white line, maybe not above the red line because that means something big is happening, but above the white line means premium sellers are profiting hand over fist in more than the typical way.
Yeah, and that's that concept of I always love explaining it as insurance contracts. When people are trying to insure their property, their trades, their investments, they come to us. We premium sellers, and we make a transaction. But the beautiful part is the risk is more limited because you have these underlying assets kind of functioning as collateral. So wonderful stuff. More of that in the webinar. I did see an interesting tweet today that I'd love to get some of your feedback on, and this is essentially the worst performing stocks in the S&P 500 for 2024. And I was somewhat surprised to see Walgreens as the worst performing stock, followed by Intel, Moderna, Dollar General's on the list. It seems as if retail, or the dynamics of retail, may be shifting in this new 2025. Any of the names on this list stick out for you? I guess CVS is also on here. People just don't like going to these stores anymore.
Well, let's talk about Walgreens. Walgreens, I think Walgreens was one of those stocks on the Dow. So the Dow Industrials is a, basket of, I think it's something like 26. Somebody's going to correct me in the comments, which is fine. But it's a handful of symbols that make up the Dow. And Walgreens, who did they replace? Was it AT&T? They replaced a name that had been on there for forever, and they were the shortest lived component of the industrials. They've already been replaced. And I think they were on there for just a couple years. So Walgreens was a flash in the pan, came and went. And CVS, that you used to go to the pharmacy to get your medicines, but now they've got pharmacies at Walmart, they got pharmacies at Costco, and the pharmacy, I think, is on its last legs. Moderna is a pharmacy company. They probably had a real run up during the COVID. They were one of the manufacturers of the vaccine, but now, everybody's vaccinated. It's no longer cutting edge technology. And, you can't expect a company like Moderna that's like a one hit wonder to continue to do the same as it did when it created that one hit. So I wouldn't be doubtful that Moderna, and then Intel. And what's funny is the CHIPS Act came along, and Intel is, it just shows how government sometimes doesn't pick the biggest winner. Intel is like the company that brought us through the 1990s and into the 2000s with the PC revolution and with the internet revolution. But, if anything, NVIDIA makes the technology now that we need. NVIDIA makes the technology that runs video cards, and that technology happens to be the best technology for mining crypto. And most of all, that's the technology that is the best technology for language models. It's not the old Intel chips of yesteryear. And so, despite Intel getting a lot of money to build factories, I think there's some new factories going up in Phoenix, which are going to take, 5 years to build. And Intel's going to have, a major presence back here on US soil. You know, they're not making, they're making the chips of every day, but they're not making the chips of the future, which is, Nvidia and some of those companies like that. So it doesn't surprise me any of those names are on the worst performing stocks. But the other thing to know about, maybe not the pharmacies, but Moderna and Intel, they're also companies that are necessary. So they're going to basically be moved from those high flying companies that are cutting edge to just companies that exist, like AT&T and Ford. They're just kind of transitioning. So it's something that rises up, needs to come down, and then it levels off. And it's going to be one of those companies that it exists and it does stuff, but it's not going to be cutting edge. IBM went through that. A lot of companies have gone through that over history.
Yeah, and I see Boeing on the list as too, and Boeing has had a slew of issues, whether it's
Yeah.
worker related or malfunctioning planes.
But
I
the
do.
scoop is there's only one other company, and that's Airbus, and they're not doing much better. It's kind of like, you hear all these folks talking about the US currency and how its time is numbered. Well, first of all, the US currency is based on the US economy. And sadly, there's no other economy with all the failings of the US economy, it's still doing much better than any other economy on the globe. I mean, China has a list of problems longer than you can imagine with their economy. So, they're all like, well, we're moving over to this other economy. I don't think so. The US is still the best economy, at least in the 2020s. Now, thinking long term, you got to kind of clean house a little bit. And maybe that's what's going to happen in the next 4 years. I don't know. We'll see.
Yeah, 2025, I feel like is going to be shaping up to be a very memorable year for a lot of history. So we'll see. All right, folks. As usual, we are broadcasting live. Today is a lighter day due to the lack of volume, lack of movement. So if there's anything that you guys are watching specifically that you want AJ's take on, feel free to throw it into the chat. Otherwise, he does have a name that he likes for the week. We've got our speed round. We're going to take a short break. We'll be back to talk about that. And man, AJ, let's I'm excited for 2025. I know you and I have been talking about some of the stuff that you're working on in the back end. So, good times. Sit tight, folks. We'll be back. AJ's going to give us our pick of the week and we'll run through examples.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So I have a question, AJ. Did you stay up for the midnight festivities this week?
I did. Well, so this is what happens when you have a toddler. We stayed up until about 9:30. We have a little theater in our basement, so we went down to the theater after we put the little one down and promptly fell asleep. But I was smart enough to set my alarm for 11:45, so we woke up in time to watch the Times Square's ball drop. We gave each other a little smooch and then promptly passed out again. So that's the life of a 51-year-old.
See, but I don't think that it's just that. I think most people were a little bit calmer this year because a Tuesday New Year is always a little bit weird because you got like the beginning of the week, you got the end of the week. You want to
Yeah.
celebrate heading into the new year. But I just it was nice to see all the fireworks. I don't know if you got a glimpse back through some of the cities, but really impressive stuff out of like Dubai. Paris had a fabulous show.
Yeah.
It was just nice to see the excitement heading into the new year. All right.
Yeah.
So do you have any 2025 expectations? I know I see that on our list. Did you have anything specific or did we kind of cover that already?
We covered it already. I mean, the only thing I'm waiting to see how January plays out. Um, I'm already seeing, it's almost when it comes to Fed adjustments of the economy, it looks like they're in a wait and see game. I mean, a lot of monetary policy is going to have a lot to do with the fiscal policy that rolls out in the next year. So, if anything, my expectations are that there's going to be a lot of gridlock. If anything, I here's my prognostications, and we can talk about this more in another show. But tariffs I think we'll probably see the existing tariffs stay, but I think that the new tariffs that have been talked about won't come to fruition. I also think that this mass deportation, we may see a little bit here and there, but it's not going to be nearly as much as, we were talking about H1B, H2B. I don't think that's going away. I think that we will probably see the tax breaks for the higher income earners that Trump, passed through in his first term. They're going to get renewed, but I don't think that we're going to see very much. But I do think on a micro, like a day to day basis, we're going to get our attention moved by headlines. And so with the markets, I think we're going to see a lot of sideways chop in 2025. And I think that the chop is going to come from, hey, this week, let's look at this. Let's create this news headline. Let's create this controversy. And we're going to bounce back and forth. It's going to be a action-packed year on little micro topics, but the macro topics I don't think are going to change.
Yeah, especially when we look at it compared to the run up in the last year, which bodes well for premium sellers. It bodes well for these quote unquote boring strategies. But
Can
hey,
I tell
boring,
you
boring
something?
grows. Yeah.
I got to tell you that we had our once a month lecture series where, we review a tactic, a methodology, some little part of premium selling, and then we put it into our archives so people can get to it. So we had this past Sunday, about 5 days ago. I saw names in our roster of people attending this, of folks that I know go off and trade trends whenever there's a trend available. So we had a class that basically, we almost blew out our webinar system because we had so many people in attendance, and it was names of people that, whenever there's a trend to follow, they leave our classes on premium selling. In other words, some of our best investors know that premium selling is in the future because they're coming back getting reviews here at Trading Trainer on how to do that. So that's just the writing on the wall. It's just validation for me that, hey, it's not just me who thinks the market's about to go sideways for a while. Everybody is dusting off their trading strategies so they can take advantage of what's going to happen in the next few months, if not all of 2025.
Yeah, and it seems more of like the longer trend, but at least on the show, we've been utilizing, especially when earnings season comes back around, some of those real short-term trades that I believe the last example that we went over was like 140% return. S-
Yeah.
Mix,
Nike.
mixing the strategies up and putting in your risk parameters is kind of the formula. So let's go ahead and
So many different ways to trade options, Sip.
that's well, and let me just pull up the quick links real quick. So, for anybody watching, listening for the first time, we've got all the goodies on this link. We've got the socials, we've got AJ's free indicator. We're going to go through some examples. You'll see a nice little green and red arrow that helps identify some of these opportunities. Show some love on the YouTube. Hit that like, hit that follow button. Some other freebies, though, the webinar, some coaching. So the next few topics that AJ is going to be reviewing, kind of stem from these strategies. But yeah, this is a great time for utilizing premium selling. And so with that, let's go ahead and pull up what you like this week, an opportunity that you see some potential in, and that is in the gambling industry sector. Your name here is Las Vegas Sands, ticker symbol LVS. Does this indicate that people are gambling less?
Well, this is one where Las Vegas Sands is moving in that sideways, choppy pattern that us premium sellers like. And you'll notice that Las Vegas Sands, every time they give a earnings announcements, they do pretty well, right? They make money. And then in addition to that, they've also been issuing a dividend to investors. So what that tells me, Sip, is that this is going to be a great company to be selling premium against. And you can see the pattern in me, meaning it goes and it's got tops, it's got bottoms, it's got a few dollar difference between those tops and bottoms, between that level of support and resistance. And we're heading down right now, and we're looking for that next bottom. Now, I have to tell everybody that when I got this top signal, and you can see this is my free indicator over here, and it gave me that top signal. Let's see, I got the top signal on December 11th. And if you guys have been around for a while, you know that I check my signals after the market is closed. They're called end of day signals. And then I program my automatic traders to look for follow through on the subsequent days. And sure enough, my trader found follow through on December 12th, the day after. And I wound up shorting some of this Las Vegas Sands. I didn't actually short the stock. I bought a deep in the money, far out in time put options. Actually, I bought a few of these contracts. So I was making money as we went down. And so I'm looking forward to this bottom signal coming up, because what I'm going to be doing, since I've already got that initial covering position in place, is I'm going to sell some put premium. That means a near term at the money put option. I'm going to sell that, make some money off of it, get it so that it's going to expire probably either the third Friday of January, or if it's a few more days, it might be the third Friday of February. I could also be looking at weekly options. I'll decide when I get the signal, and then I'll buy a protective call option to kind of protect myself should the stock reverse back up against my long put. So I'm basically going to be applying the collar. But for those of you that don't have that initial covering position in place, this bottom signal for you is going to be a great time for you to go long. So that means you're either going to be buying shares of stock. You could be buying Las Vegas Sands. We're targeting somewhere between the $48 and $50 per share price. And so you'd want to buy that in lots of 100, because everything we do in options is in increments of 100 shares. Or you could, if you wanted to, we have our options lookup tool. So you come over here, and this is free to anybody right now while it's still in beta. You come to you just have to get a free account to our web portal. What we've been looking at when we type in Las Vegas Sands and we look for option replacements here, if you don't want to buy the stocks, if you want to include a little bit of leverage, we're probably going to go out to this September timeframe right here, September 2025. You want to give yourself enough time on this initial covering position that you're not going to run into any problems. And the one I'm targeting right here is the Las Vegas Sands September expiration, $35 strike price call. So this is going to be almost a perfect substitute for buying the stock, but instead of spending, the roughly $50 a share, this guy is going for about $15.75 a share. So you can use a little bit of leverage, make sure that leverage, you incorporate that into your risk modeling. Everybody in my program knows how to adjust their risk modeling in order to take care of that extra leverage. But this allows you to get into the symbol at a much cheaper price. And so that's the option as well. With these sideways choppy stocks, you could play it from both directions. I'm currently playing it from the top. But if you're not in this yet, you could play it from the bottom by going either long the stock or long the substitute option. So Las Vegas Sands, turns out it's got a great option chain. It's also got the perfect pattern. And so whether you're coming from the top or the bottom, this is going to be a great premium selling trade, at least for the month of January.
So I have a question. It looks as if that 48 level is setting up as support, and if you're going to take it to the long side, what if it breaks down to that 42.40 level, what are you risking? Like when you're putting your trade on, you know that can potentially happen. How are you protecting yourself?
So a couple things. First of all, we're going to use the same signaling process. You can see my signaling process has been pretty robust. This is the fast MACD end of day signal. So we're going to use our signals, and then we're going to also, those are end of day signals. We're going to wait until we get follow through. So the scoop is I'm not going to place this trade until I get my appropriate signals, because those signals won't come, SIP, unless there's actually a bottom being found. So that's number one. But then once we're in that trade, we're going to use traditional, conditional, and stop loss orders to protect ourselves. And once we get a little bit of up price action and we apply that collar is one of those great option strategies that not only creates income on the premium sell, but it also passively adjusts. So once we have that collar on the trade, meaning we've sold near-term premium like I'm about to do, as well as bought a 3 to 6 month out protective option, when we put those two, we call them adjustment trades, on in addition to the initial covering position, you can sit back and relax. You don't have to worry about any active methods to protect yourself from any risky situations. Those, a collared position self-adjusts. It takes care of itself. It defines max risk. It defines max reward. So, that's kind of our goal. Our goal is not only to get that initial covering position on and, protect ourselves with traditional methods once we get that reversal signal. But then when we put the collar on, we're fat and dumb and happy just collecting money at the bank every month.
Yeah, that's what I appreciate about some of your setups is there's an in, there's an out, there's a best case, there's a worst case. It's all in place, and you can, go to sleep comfortably without that angst and anxiety, that we've discussed that could happen with trader psychology and wanting to be right and wrong. You're kind of relying on the math and some of these proven methods to put you in a good position. So
Yesterday when we were in our workshop, we actually went through the two different scenarios on the user's pick. And what's neat is a lot of times the two different scenarios is a losing scenario and a winning scenario, especially when you're talking about just trading trends. But when you're talking about premium selling, we went through the two scenarios and it was like, which one won better? There was no real like loser. Instead, it was like, if we went scenario A, we would have only won by this amount. If we went with scenario B, we would have won by this amount. So it was like, well, which one do you choose? You're going to win either way because we're using the option strategy of time passing by. So it was really interesting. I really loved yesterday's call because it just proves when you're starting to think differently with option trades, you don't have to just think black and white. It's either going to be a losing trade or a winning trade. It's more of like, if time passes by, it's what degree do you win by? It doesn't really matter what scenario you use because either one won.
yeah, and that seems to be the case with some of those volatility crush and rushes where you break even, you make a percent or two, or you knock it out the park with 140 plus. So
These are the strategies in trading that I like to do. The ones that, the two scenarios are win or win, right?
and the founder of the community, you have a lot of now intelligent, bright people helping to even give you some insights, and so it's a very
right.
cohesive. Every Thursday, the masterminds get together. You go
right.
over some stuff, you highlight the opportunities. So if that's something that you guys want to get a part of, head on over to the links page, sign up for the webinar, follow the socials. And yeah, I mean, we try and go over some of that stuff here on the show, but I know you hold a lot of it back because that's the juicy part of being part of the program is you got to get into that Thursday workshop to get even more names. But we do like to highlight at least a good quality one every week.
Las Vegas Sands for sure.
And then we've got some names from our viewers that people are either looking at some names themselves or they're in a position and they want to know, AJ, what you think. So let's head into our speed round. We'll start off my way out here on the West Coast. Susie from San Francisco wants to know your thoughts on Unity Software, ticker symbol U.
Do you know this company?
I'm not familiar. I'm going to go ahead and Google it right now.
Yeah, they're, I think they're, if I'm correct, they're an 3D animation software provider. I think a lot of movie, folks from Southern California go up north and use some of these technology. They might have been, if I remember correctly, a break off of LucasArts. I'm not sure. But they make a software, and I think they're actually jumping into the AI thing too, with AI applied to 3D animations and stuff. Okay, let's see. Oh, we've got. It looks like all of our picks are ladies. This is great night, Ladies' Day. So yeah. This is a hard one. You can tell that they're a software company, right? Because they're kind of cutting edge tech. Yet had a quarter with profits. It looks like they had a little dip. They're going up. If I go from the bottom of the dip with a best fit trend line here, they've got upward movement, but at the same time, it's ascending. Here's what I would do. I'm seeing bottom forming here. We've got a couple of bottom signals. I'm going to zoom in here again, Susie, back to say 6 months. I see I got a signal on December 26th, but never got our trading day follow through. My automatic traders would have poo-pooed it. And then on the night of December 30th, my signal from December 26th was reversed, only to give me on the night of, last night. Last night I got another signal, but I'm not getting that follow through. So this is, again, that importance that Sip and I were just talking about, which is you don't trade until you get the end of day signal with subsequent day follow through. So for those of you, it's really black and white. Where I've seen mistakes is where people jump the gun and without getting either the end of day signal or the subsequent day follow through, they pull the trigger. Wait for your signals, right? So wait for your signal. And this is a great, whenever you're uptrending, a little bit, and this is not uptrending at great neck speeds. It's uptrending pretty quickly, but not at great neck speeds. You want to get into a long position, right? So let's go ahead and trade the stock. We might be able to trade a substitute option. Let me just take a quick look at substitute options here. So it's loading up as we speak. I'd probably want to go out. August might be good. Yeah, August would be good. And I'm just looking. It looks like we've got some okay. You know what? I think there's some okay liquidity, but you want to go pretty deep if you want a substitute option. Use maybe this $15 call expiring out in August, or let's look at September. September's got a little bit more activity. Maybe, I don't know, August or September, go deep in the money. Let's trade that or the stock itself. And then when we get a top reversal, the fast MACD looks like it's giving us pretty good signals. So I would just rely on the fast MACD unless you've got something better. I'm never, totally committed to a particular signal. I just like signals that work. So the fast MACD looks good. If you get a fast MACD, forecast ahead, sell those strike prices, buy the protective ones, but forecast that trend. You could turn this into a hybrid trade where you probably wouldn't collect the big premiums that a sideways choppy trade would collect. You'd collect some premiums every month and you'd protect yourself with that collar, which sometimes feel a lot of investors feel is more important to have that, collar on so that you don't have to white knuckle your trades. They automatically protect themselves. But at the same time, when you do finally get out of that initial position, you'll take advantage of the fact that it's been trending all this way. So I think that's how I'd play it. It's an interesting play. It's probably a little bit more cutting edge of a company than I'm interested in. I like boring stocks that aren't doing anything that's cutting edge. I like them when they just create income and put bread on the table for me, or bread, or maybe, theaters in my basement, things like that. So, but yeah, I could see how you could trade this and you want to trade it with a hybrid strategy.
Yeah, some setups are a little bit better than others. This one's kind of mixed bag. So thank you for that, Susie. Moving on to our second name, and I'm interested to see what your take is on this. Jennifer from Palm Springs, Florida, wants to know, AJ, Trump Media and Technology, ticker symbol DJT. What's happening? We got some options, some opportunities.
Yeah. Okay. Look at this. This is an interesting picture. This is a textbook um, consolidation pattern, or converging channel is another name for it. So what does that mean? That means that traders are sitting on their hands wondering what's going to happen next. They're not really in the mood to buy. They're not really in the mood to sell. They're kind of consolidating on this $35 price and waiting to see whether they should buy more or they should dump their holdings. So they're kind of in this moment of, is this company gonna, go or not go? They don't know. They're not getting any feeling for it. So they're consolidating. Think about it. Whenever not investors, whenever anybody is forced to wait for something, when something is out of their control and they're forced to wait and just ponder about it, what happens? Well, typical human nature is the longer you make somebody wait, the more they get in their heads and they start thinking about things, and their reaction when the whatever it is, whether it's a positive news or negative news, their reaction is usually um, over exaggerated the longer you've made them wait. And so that's kind of what happens in the markets. You make somebody wait, and it looks like they've been waiting, gosh, since the beginning of November. Um, you make them wait this long, no matter what the news is going to be, positive or negative, it's sure to have a pretty extreme reaction. So here's what I would do. This is Jennifer. Hi, Jennifer. Here's what I would do. I would start to look at the headlines around, and you can go to any of the free softwares, whether it be Yahoo Finance, FinViz, any of these ones that'll post the headlines. And I'd also look at things like insider trading, which is also public information. And I would see if I could find perhaps some sort of events that are happening that could be the release of either the positive or the bad news, that'll be the tinder that sets off this reaction by these investors that are sitting on their hands. And I try to get ahead of that ball. And one of the ways, if you don't know, if you can pinpoint the time, like the scheduled event, but you don't know how investors are going to receive the news, whether they're going to want to buy or sell, you could use something called a straddle or a strangle. And in this case, it would probably be a straddle around the $35 strike price. A straddle basically profits whether the stock goes up or down. The only time a straddle doesn't work is if the stock just stays going sideways. So if you know there's going to be an event and you know that it's going to pop the price either up or down, but you're not sure the direction, you want to look into a straddle. In fact, if you use a straddle that is near term, you could actually, and this is getting a little bit nuanced, and you may want to come to Trading Trainer and learn about this a little bit, but you could use a straddle. Even you could get in and out of the trade before the event even takes place, and you can take advantage of a volatility rush that could occur. So again, option strategies give you all sorts of choices. I see a consolidation pattern. I'd want to trade either a straddle or a strangle or a hybrid of those two trades. And there's different ways you can trade it just to take advantage of this uncertainty and this anxiety that's building in the investors of DJT.
Yeah, I'm always a believer in actual substance of a company as well. They are a $7.3 billion market cap on $4 million of revenue. So kind of curious on how they would make up that gap there. It
Investors,
is
that's one
the
thing about investors. Investors want a clear path to know how they're going to get their money back.
I don't see it happening from Truth Social advertising because I just went to go see how it looks. Because if you're going to compare it to Facebook, Google, Twitter, those are all kind of seamlessly integrated where anyone can go create campaigns and add credit cards. Looks like they're still doing things the old school way. So if they were to pick up some traction, I'd love to see that evolve and maybe get some more traffic and ad dollars there. But interesting name tied to the incoming president. So I'm sure there will be some drama around this as we head into the new year for sure. So thank you for that, Jennifer. Our third and final name is a name that's actually all over the news this morning. Sherry from Philadelphia, Pennsylvania wants to know your take on U.S. Steel, which I believe was being bid for by a Japanese company, and the government just put the axe on that. So interesting timing here.
Yeah. I've been following these news headlines. I mean, this merger or acquisition of U.S. Steel by a Japan-based steel company has been in the works for 36 months, 48 months, something like that. Okay, so it's not going to go through because steel is one of those things that should probably stay owned by a U.S. company. The workers wanted this. Unions have been, steel is very unionized. And so the workers wanted this. The U.S. government wants this, but maybe it's not going to make dollars and cents, right? This particular company could probably do better if it merged with another one, at least economically. So here's one of those cases where, maybe there's a reasons for a company to exist outside of the capitalist normals of a company exists to make profit. All right. So yeah, on this news, you can see it's pulled back on this news of the U.S. government blocking the sale, but it hasn't pulled back. This was expected, so I still see a level of support here at $30, and so I want to see if that level of support holds. Again, one of my favorite indicators is this fast MACD. So I want to see if I get another light blue fast MACD end of day signal to say that this $30 holds. If $30 holds, then even though this sale didn't go through, um, a lot of times what happens, especially when the government gets involved, is they promise the company subsidies. So this reversal could make the investors of U.S. Steel still very happy because it means that there's going to be some government dollars propping up this company. So let's wait for that reversal signal. And I think this would be a great time to purchase. I know a lot of people are saying, hey, the deal didn't go through, we should sell off. I always like to be on the other side of the equation, but only when I get my signals. If I get my signals and $30 holds, I'd be in the market to buy some US Steel. And again, I like to buy things in lots of 100 because then I can do option strategies against it in the future, do adjustments with adoptions. So look for that. Look for an opportunity to buy US Steel at $30. I think if we get the signal and it's around the $30 mark, then I think it's an opportunity to buy into a company that's going to get propped up in kudos for the at least near, if not medium to long term.
Yeah, and it just in November it was up at the 42 mark. So, for a traditional type of business, that, $12 move is pretty solid. So
And
if
if you own the stock, you get dividend. So, I mean, it's not much dividend. They're only giving a nickel a share, but they're doing their good tidings here to let the investors know that US Steel is a viable company.
Yeah, and this is America where we love steel and we love building things, and we're gonna
Steel and concrete.
continue to build and grow America, and hope everyone can get on the bandwagon.
There has been not to bring up a long-term problem in America, but there has been basically a 2-decade decline in housing for Americans. And there's been a push again by the government to get that housing numbers higher so that Americans can afford where they live. And so steel is going to be something necessary over the next 15 years. It's going to be something that is pushed for fiscally. And so, I don't think it's a bad investment. Just make sure you wait for your signals, and everything has to follow the plan. Don't go rogue. Follow our plan. Our plan is watch this level at $30 and make sure we get our bottom reversal signals.
Yeah, and as always, if you want access to that indicator, head on over to the All Tools links page. Get access to the webinar. Check out some of the other freebies in the education portal. A lot of good stuff. A lot of great stuff coming out that's going to be coming out in 2025. I know AJ and the team is working hard on some really cool tools, features, just trying to make it as easy on everybody to get involved in implementing these strategies in your or our portfolios heading into the new year. I imagine next week's show is going to be a little bit more impactful, right? We're going to have everyone coming back from holidays. We're going to start having some of that volume pickup. Thoughts, final words as we head into the new year. What are you going to be looking at next week?
I mean, the scoop is, folks, is the time is ticking down. I think January is going to be thrust into some, active trading. So you got about 3 days left in order to review your watch list, have your strategies, reviewed, do some back testing, do some paper trading, do some past testing of paper trades, play around with your scenarios, get refreshed on these strategies, because I think we're going to need them, and you're going to need them. You're going to have to be fresh on them. You don't want to be learning on the job here. You want to be taking advantage of all the gains that can be had, especially this upcoming month. So get that review in.
And with that, head on over to the links page, show some love, hit that like, hit that follow, hit that subscribe button. If you have any questions, leave a comment, send us a DM. Someone will get back to you. Otherwise, have a wonderful weekend. We're truly excited for everyone joining us in the new year, and hopefully we can provide value to you in our weekly segments where we dig into AJ's wonderful trading experience to try and find some winners and to put some money to work. So thank you, AJ, again for your time. Thank you for all the hard work in 2024. We do appreciate it. That's all I got from my end.
Bye.
See you guys.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh